Thank you so much for your time on the show today, Alex. Interesting times we're seeing for the GSE now. We see this is on steroids now. Can you talk us through what is fueling this positive run?
Well, thank you very much. But honestly, I think the market is looking very exciting this year. I mean, it started Q1 on a very strong footing. But I must also highlight that the gains that we have seen so far is coming mainly from MTN Ghana, and it's not broad-based. For example, if you look at the financial stock index, it has just gained around 6% on a year-to-date basis. So that tells you that most of the gain that we have seen is coming from the non-financial stocks that led by MTN so far. We have also seen some contribution from the consumer sector companies due to consistent undervaluation over the past few years because of impacts of COVID and also operational challenges with a couple of companies playing in the consumer good sector, like Farm Milk, like GGBL, that i.e. Guinness Ghana Breweries, and Unilever. But of course, we have also seen that those companies, I mean, have been able to turn around the operational performance quite significantly. So it is also generating some interest for investors. So we have seen that Guinness Ghana is also supporting the growth in the market. Farm Milk is also doing same. And we also see growth also coming from the oil marketing sector, i.e. Total Petroleum. So in a nutshell, the market is looking very exciting, but it is not broad-based because we haven't actually seen much from the financial sector, which hitherto has been the more dominant sector on Ghana Stock Exchange. The growth is mainly led by MTN, whose capitalization is quite significant in the index, around 25% currently.
All right, but let's get into that because you say it's not broad-based, but I'd like to get to what we've seen play out with Guinness Ghana there because we saw that was the best performing stock last week.
Come again?
I would like to get your thoughts on Guinness Ghana because we saw that was the best performing stock in the markets last week.
Yeah, sure. It's because, I mean, the company has been going through some operational challenges in recent years. However, we've seen the company is successfully turning around its performance. If you look at the latest, the Q3 results that came in, the company managed to increase profit by over 170%. So that is actually sending out positive signal to investors that, well, things are actually improving in the company. And that, for me, has been the reason why the demand for the stock has been soaring on Ghana Stock Exchange.
All right, but what about foreign portfolio investor participation in the market? Are we seeing a little more of that happen now?
Well, it has been strong. I mean, the only difference, like if you look at last year as compared to this year on a quarter-on-quarter basis, if you look at Q1 this year compared to last year, I think foreign investor participation has been fairly strong on the market. If you look at this year, it's in excess of 80% so far in terms of those who are actually buying and selling on the market. Last year, it was also strong, I think in excess of 80% in terms of foreign investor participation. But however, we saw that last year, more investors were actually not willing to bid higher prices for stock because of the uncertainties that we saw, I think, from COVID and other factors. But this year, I think investors are willing to pay premium to the market prices. And that is actually what is causing the prices to actually rise that we have seen so far this year.
All right, talking about other catalysts that could be driving the market, I'd like you to speak on the first quarter earnings so far and what we've seen play out.
Well, I think most of the companies, I mean, with the exception of very few, has been excellent. If you look at the banking sector in particular, I think with the exception of Societe Ghana, that actually reported a subdued growth in profits for Q1. I think most of the bank has been reported very good results for Q1. For example, if you look at GCB, which is one of the largest or the largest bank in Ghana by branches, reported about 42% growth in bottom line. And same trend for EcoBank Ghana also. And then Standard Chartered also reported some decent numbers. So if you put everything together, I think the banking sector is actually emerging out of COVID, and that is also creating some excitement on the market. However, we haven't seen much from the banks because the Q1 reports came out quite late, and we believe that investors are still digesting the results. So going forward, we are likely to see more interest from in the banking sector on the back of these solid results.
All right, but let's look at the fixed income space as well. I'd like to understand what's playing out there as well. I understand that there could likely be, or most likely be, a bond auction this week.
Yes, I think the fixed income market has also been great so far in terms of participation. However, we have seen that yields are actually dropping across the board, especially if you look at the mid to the longer end of the yield curve. Yields have dropped quite significantly so far this year. We also got the impression that government is actually looking to refinance some of the domestic bonds that are actually trading at high, that were issued at high yields. So there is a lot more liquidity in the market, and we think that yields could continue on to drop to around 17-18%. If you look at it from the mid to the longer end of the market. However, on the trend on the shorter end is also similar for the 91-day, even though we have seen a little bit of uptick quite recently. But last week we saw that the 91-day bill, the benchmark bill, actually dropped by some pips to about 12.79%. So things are actually also looking great on the fixed income market on the back of bond price rallies on the market so far.
Very quickly though, what are your expectations for the money market auction for this Friday?
Well, this, as I mentioned, we have seen some kind of up and down in the money market side of the market, I mean, of the fixed income market. However, going forward, we think that yields is likely to be more stable because if you look at the spread between the monetary policy rates and the 91-day, I think it's in line with the historical level. So we think that on the money market side of the market, we are likely to see a more stable yield. If there's any decline that we will see going forward, it will probably come from the mid to the longer end of the market.